All right, so in this video, this is basically everything sort of put together and like how to make a plan. There's the number one thing your job as a trader is to protect your capital. Protect your capital, but also not being afraid of playing the charts. Like actually, like you can't make money without risking money. That's how trading works. You have to risk something, but your job is to find the best risk reward. So remember, I told you, you want to be anticipating what could happen, and by using that knowledge, you want to be saying, well, it needs to do this, or else it's going to do this, right? Fake breakout reversals, all these different things. So like making a plan every day when you wake up and you're in the market and you're trying to make a plan. This is what I mean by making a plan. You use the levels and you figure out, and it takes time. It takes time to understand. One, you have to be able to read the market, price action, levels, technicals, all that. But like this right here is the S&P 500, and this was Friday. And this is what I mean by making a plan. So if I was playing the S&P 500, I ended up playing NQ, which they all sort of move in the same way, in a way. In a direction on the bigger picture, though. On the intraday, it's different. But my plan would have been this on Friday if I was playing the S&P 500. Here we're at a +1 ATR. So we're getting pretty extended. So my plan is I want to get in as close as I can to that pivot. It's not going to be exact, but I want to get in close and risk up to that. So I might have got in right here when I saw this gap up and push, get in short right here, risking to above here. And when it comes to where you have more contracts, like say for instance, we're having one contract, you're gonna have to risk a lot more. But a lot of times when you're building a plan for the bigger picture, this is how the pros do it. As in, I might enter one contract here, risking above here. If we end up getting close to the pivot, then I might add two contracts, risking above here. So you're building a position for the bigger move that you're looking for, which would be coming back down to here or here. So then when you do reverse, you're selling one contract here and then leaving a runner for here. So how that looks is you sell and then you move your stop to break even, and then you have that runner, and that's it. So when people say, oh, you need to have a plan, or when I say you need to have a plan and you need to look for at least 1 to 3 trades a day, that's what I mean. This is one play for the morning. And the one play was short it here and wait for here. Not get in, get out, get in, get out, get in, get out, get in. It's looking for that bigger picture. On NQ, we never got to that +1 ATR. We were like at mid-range, but still, the concept was the same when you have a failed breakout reversal. So, and you're at, say for instance, right here. So that's why I like using intraday and the smaller time frames for entry, right? So I knew on the bigger time frame we were exhausting. So look for a potential reversal at some point after the first 30 minutes or hour. And then, the confirmation is when we're breaking back below this pivot and you get in. Looking for your points, and that's your plan. So planning is critical so you're not shaken up and taken off guard. So here's another plan for the week. So this is how I plan the week. Monday rolls around. What's happening? So Monday and Tuesday, you don't know what's going on. The week hasn't accumulated. So you have to look at the previous week for data. Okay? So clearly they had a trend. They broke the trend. They retested the breakout and they failed, and they closed it right here. So where do you think Monday we're going to go. At least Monday we open up. I believe Monday we're at least going to go right here. That's going to be my first target. Where did we go? We opened up. We retested the. We filled the gap. So gap down, filled the gap, and then they reversed and they came back down, and they came to at least right here. Within the first 30 minutes, they came to right here, and they tested last week's low. So this is the low of the last week. See? So that was almost a guarantee that you're going to have continuation, right? Now, whether having a 2 days off, right, Saturday, Sunday, and being, mentally refreshed, and seeing this, a lot of times, we get shaken up because, we're not, you're not used to that, the daily grind Monday through Friday. You have a break, so you forget what happened last week. But that's how you make a plan. You're like, oh, well, if we end up breaking, somewhere up here, then we could be consolidating. See, because look, this was a lower high, so that potentially could have been another lower high, and this could have been the low for the week, and we could end up consolidating right in here, and then say that was Monday, and then if they did that, if they would have held the low of Friday in here, guarantee they probably on Tuesday they would have came back up. They would have broke this out, and they would have came all the way up to the mid-range ATR, right? This is what was expected. But because they broke below the support, this was the low of the previous day. You use that as resistance. That's sort of a technical analysis, like 101, like basic. Like whatever the low is of the previous day, that's resistance until proven otherwise. So, and that usually happens a lot when you have the closures. See, closures low, they're low. So how I would have planned for this day was exactly this. I would have planned for low, and then it could go anywhere. It could have came down here, and it could have held this this bull pivot and came back up. But because we broke it, now new rules come into effect. We have a closure. Now we're going to go lower and potentially all the way down here. And so that's what ended up happening. So Monday came down here. This was the morning. Afternoon, they came back up. They held this. Now resistance. Okay, next day happens. Now you got a plan. What are you going to do? So here's the other thing. Remember, anytime I see a lower high, higher low, you always want to overextend that. That is really important. Because remember what happened down here on this right here? If this would have broke up here, that would have been my target a lot of times. So again, longer you go without retesting that breakout or making a third point of contact, the likelihood it's not going to happen. So that's I shouldn't have done that on that video. Showed you to do that because in reality you should do it on a smaller time frame. When it's extended so far out, that's sort of gambling right there. This right here is actually an expected move. So let's go back to planning. So Tuesday, what do? Tuesday, you wake up, you see that the market is right here. Let's go back to where we actually were on the day, on intraday. Here we go. So this was Tuesday. Just this right here. And this is what ended up happening. Remember, so you use this on bigger time frames too. So here's a level, which is going to be your resistance. Here's also could be your support. And it has to mean, it could go below it, but you want to see how the 30-minute candle closes. See how these 30-minute, these wicks? And look at this. You have this rejection candle. See how it just came all the way back down, almost like a sword. I like I like those patterns because in a way, this sort of tells you really where the sentiment of the day is. I mean, really, when you see this, because imagine this being an arrow. Like imagine this being like an arrow pointing down. See what it is? And that tells you, hey, this is the direction that it wants to go at some point, right? But look, it came up first before it came down. So when making a plan, you know that you could get stopped out, but you want to be able to shake it off and reassess. So if you go back to the day, what do? We have the intraday pivots. We open below the bull and this pivot, and they came all the way down here. This was support. They shot it up. And look, these lines right here is what I drew from right here. They're playing in between. And now look what they're doing. They're creating a lower high, higher low. And then when this broke right here, that was when they told you the direction. So anytime you have a consolidation and they pick the direction right here, then you know there's eventually going to be continuation. But remember, it's going to be on its own time. It's going to be on their own time. It could be fast, but remember, look, we're at support. So unless it blew through, the idea is still there, but it's going to take a while. Look, so it came down, retested the breakout, but it never could get back up. And then eventually it wasn't until 130 or 120 that they finally broke it. And then this is when it starts getting violent. Down, consolidate, then up, right? It made the move it wanted to move on the bigger time frame, right? Here to here, 215 points. It made the move it wanted to make. Then once it made the move, then new plans intact, right? Now that's the best risk reward for a long. But this right here a lot of times scare people. Seeing this scares people. They think we're going to keep going. But this right here, I see opportunity. I got in and I made the move and I got out and I'm going to sit on my hands and see how the market's going to react around a big pivot, right? So this takes this right here. This is a high level skill play. A lot of people have a hard time playing this because of emotions. But I'm not trying to teach you that. I'm trying to teach you how to make a plan. So making a plan means, sitting on your hands and knowing where you're at. Like this was hard right here because we're in the middle of it's just chop, right? That's why. But it's hard, but it's also easy, and it's a lot of points if you know how to play this. This is a lot of points. This was like right here. 75 points up, 75 points down. 75 points up. It's just like there was like 300 points just on here. But if you can't play chop, don't play it at all. Get in at the best support or resistance. Because remember I told you that the number one thing you need to ask yourself is if it doesn't do this, it has to do this. So like I said, if it doesn't go through this line, if it doesn't blow through and keep going, it has to reverse. It has to reverse. Or, so if it doesn't do X, it has to do Y. If it doesn't do Y, it has to do Z. When I say Z could mean it's going to chop. So if it doesn't go up, it has to come down. If it doesn't come down, then it's going to be sideways. And the market doesn't like to be sideways. Very rare do you go sideways. You went sideways and it picked a direction and then came back up. So there's always a lot of points to be made in the market every day. So do not feel like you're missing out. There's always. So with the plan, that's what I mean. So one, you need to start your day off knowing where are you at on the bigger picture. What could something do? And if it does that, what do I want to do? So let's go back to SPX. So let's talk about next week. Next week, that's why I have these lines here, here, and here. If I double click on here and I change this to swing, what is swing? Swing is the month. Swing is the move for the month. Look what it has done for the month. SPX has played perfectly within these pivots. When I say perfect, it's done exactly what it's supposed to do. It held, reversed. It held, reversed. It did a look above and fail, reversed. That's a play right there. Just because it broke out doesn't mean that it was wrong. This was right. This was a perfect failed breakout reversal. This was a look above, look above, and fail, and a big fail. So higher, more it goes out and comes back in, the bigger the move. See how it only went out a little bit, so then it only came down a little bit. You know, you'll see that a lot too. Bigger the move up, bigger the move down. So next week, this is what I'm anticipating. This line right here, I drew that for a reason. Because we have 1, 2, 3, 4. 4 more days until the end of the month. And then this is March. So visualize. You see what this is doing? So now we have a TA. Look at this. Friday created a lower high, higher low at a support. So what is going to happen? This has to break out on Monday. This has to break out here. And if it breaks out, it has to do one of two things. It has to do this. It has to clear the high that it made last week. And if it does, a lot of times what it'll do is it will come back, retest, and then it's going to finish out the ATR move for the week, right? It's going to do it in its own time, right? It could do this, it could do this. I honestly think what will happen, what I'm hoping to do, I can't go long. It's really hard to go long because what they may end up doing is they can end up doing a lot of fakers. They could do this, and then if it ever, so remember this rule on a TA. I didn't teach this in the TA lesson. If you at any point you break out of a consolidation pattern and it comes back down, so this is consolidation where it found support. If it breaks back below where it broke out, it'll be violent. When I say violent, they usually will hit it hard, and then they'll find the next support. So that's what they'll end up doing. What I'm hoping we do is we gap down, and we found support right here, and I want the rest of the week to then do this. That's the move I want for the market. But guess what? I can't get what I want. The market's not going to give me what I want. It's going to give me what it wants. So, but this is what I mean by anticipating the move. You use the levels to know that where are we at? We're playing in the middle of the road. So it could do whatever it wants, right? So, but you got to react to it, of what it wants. But knowing that if it comes down, I want to be scooping for the long. And that's making a plan. And if it doesn't happen on Monday and it happens on Tuesday, great, right? But every day you want to know what things are, what's going on. So that's the plan for the week because I'm using the bigger time frame at the end of the month. And a lot of times what ends up happening is it gets crazy on the last day of the month because monthly contracts for options are expiring. So if at any point, if Friday we actually did get up to this point at this 41.50 area, you better believe it, I'm going to short it. And we could have some pretty crazy moves. And so in Q, I don't know where it's going to go. If I double click on this and let's see what it does on a swing, NQ can easily next week pop up above this mid-range and make its way up to the +1 ATR. I don't know. I'm monitoring both, but this is how I'm playing this, as in this needs to break this area, the 18,106, for me to be convinced. And this right here is as a perfect example of how you want to use your TA and using levels. So Ideally, we drop down. I don't think we'll ever come back down here next week. It's very if we do, what will end up happening if we end up breaking this area, this would be considered a double top and they might end up yanking it. But the odds are what they might end up doing is coming down to at least this area and then reversing. So at least on NQ, I'm having an idea that they're going to probably do this and then break out. So a lot of times what they'll do is they'll come here and they'll fake people out, and then they end up the next day they end up gapping it up, and gaps are strong. So if they end up gapping it up above this area, then you better believe it. They're gonna minimally that day that they gap it up, they're gonna probably come right here, and then they'll end the week, sort of in this area. So making a plan is figuring out the bigger picture, right? And knowing how the market moves. And that just takes time. It takes time by looking at patterns. You see right here, we opened down here, we came back up here, and then look, we ended up breaking out, consolidating for 2 days, ending the week, bringing it down, come up. It's the market's going to move in these weird waves, but at the end of the day, it's telling you what it wants to do. It's telling you if you're able to get in. If I got in, I was short right here. I knew that we're going to come to at least down here, and then look, we were struggling right here, and this was a look above, and also then this was a fail. But I don't necessarily like using this for shorter term. Remember, my ideal pivots are going to be the multi-day, weekly. See how more accurate this is? But you cannot underestimate the power of the swing positions, because you see how, look at this, that right there was telling me, that was a really critical area, really that 50 the 18104 area. So anyways, I'll do some more videos, but hopefully that sort of helps you get an idea of what I mean by making a plan. The plan is your plan. It's bringing it all together, and it's reading the chart and knowing where support and resistance are. So like right here, knowing that, okay, well, it could push up. Okay, I want to short. Resistance. Okay, fake breakout, needs to keep going. And guess what? This needed to go hard. Last week, when this broke out, this needed to push and push hard, because now this is a failed breakout reversal on a bear pivot, right? And remember when that happens, look what happened right here. That was a big break. Same thing right here. Look what ended up happening when it broke below the bear and came back above. They squeezed it hard. So the fact that they could not do that the next day, that trapped people, and then that's where you're violent. And look, again, you just needed one of those days. You find these big plays like this. If you didn't do anything and you just played these days, you'd be doing extremely well. Because look at this. This opened right here and then closed. You could have got in anticipation of the long, and then boom, 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 boom. So anyways, good luck. That might or might not helped out on making a plan. Making the plan section is mainly finding support resistance on levels, trusting in them, and then getting in and then holding for at least half an hour. If you scalp, that's a whole nother strategy, and I can't help you with that. That's a tough thing. Scalping is tough, because the moment you lose the edge, like if I would have got in here and took profit right here, like that's it. Like you're done. Like if you try to get back in right here, like it could have reversed on you, and you could lose all the money you made here by it reversing and coming back up here. I've seen that many times. So you literally just had to get in, and you had to wait. Like you either will make money or you're not. Your ideals are not always right, but you need to be more right than wrong. So you have a thesis. You're like, wow, look, it came down here, broke here, and it broke here. So the next spot, it has to come here. So you get in and you hold. So, and that took 10 minutes. So if you're taking 1 minute to get in and out of a trade, then yeah, it's going to be really tough for you. So, all right.